The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are just cleaning up on this very active week we're seeing in the land of options and volatility. My name is Mark Longo from theoptionsinsider.com, as well as many of the shows here on the old Options Insider Radio Network. And there's a little bit of technical kerfuffle going on behind the scenes, but we should be joined momentarily by good old Uncle Mike Tosaw, as well as the boys from OX. In the meantime, it is...
And if not, the good news is this will be the best podcast of the Option Block that they've ever heard.
There we go. You and I will just tear it up, sir. That, of course, is the Seabass himself, good old Mark Sebastian from OptionPit.com. And if you ever heard the show before, you know Mark and I can pretty much fill a whole show by ourselves.
Oh, gosh. I never thought I'd meet somebody that loved the sound of their own voice as much as me, but then you came into my life, Mark.
Well, that was a dramatic day when I did come into your life. But yes, you know, ironically, I can't stand, in fact, I loathe the sound of my own voice, yet it somehow seems to pay the bills, so I accept it. All right, what is going on these days at OptionPit.com? Anything interesting, anything exciting? You had something going on at the CME the other day. How did that go?
That's the 21st of
that's coming up. That's coming up. Okay.
No, you know what? I was on Bloomberg on Tuesday, and then I was on First Business Wednesday morning. So that's what I had going on at the CME. So hopefully everybody caught me on Bloomberg. I basically said, I don't believe any part of this rally at all, and I would sell into it. And then they hung up on me and let some guy blast me for 20 minutes, but I was right. So that's what really matters.
Gotta love these shows and the way they orchestrate their guests and everything.
You know, I had the producer on, and I hear the guy just saying, "Well, blah blah blah. He's a traitor. What does he know? Blah blah blah." And I was like, "May I rebuttal, please?" And they were like, "No."
No, of course not. See, that's why I don't answer the phone when those people call me.
I know,
because it's just usually a something like that, a cluster F, if you will.
I love the long-only fund approach. It basically says this. If you're walking from point A to point B, and there is a massive pile of dog crap on the ground, you know what? Walk through it anyway. You'll eventually get to where you're needing to go. Why would you need to walk around that pile of dog crap? You're still going to get from point A to point B.
Hey, Warren Buffett, I think Warren Buffett has just paved the way for legions of these people to follow suit, even though Warren Buffett is far more nuanced than they give him credit for and actually does trade derivatives, but people still hold him up as this icon of buy and hold, and they just follow blindly in that path. And listeners, overcoming his technical hurdles, we are joined by good old Uncle Mike Tosaw from Know Your Options Inc. Uncle Mike joining us via phone from scenic St. Charles, Illinois. Uncle Mike, how are things going out in the land of the mountains?
Doing well. Excited to be here as always.
I don't know if you know this, but I spent the afternoon with your better half, Mr. Kavanaugh, Auntie Mike, as our listeners may know him. We had a lunch and learn over at the KYO offices. And I thought the maitre d' was a little bit much, but the steak was pretty good. I was impressed. And the foie gras was just to die for. But no.
Oh, for crying.
You missed it. You were out in the St. Charles satellite office.
Now,
I was hunting the lunch for you guys.
There we go.
Oh, I like that. Now, Mark, we've missed the most important news of the day so far. Can't believe you didn't bring it up. It is. It's Dr. J's birthday today.
Oh,
He
who shall not be named on this network.
It is.
Well, you know what? Other important dates coming up. Do you guys know that National CB Day is coming up on Tuesday?
National CB Radio?
CB as in CB. Yep. Oh, okay.
10-4. Also my birthday. Hence the reason I know such trivia. Yes.
When's your birthday?
October 4th.
Oh, nice. My anniversary is the 11th. And you know what? I'm almost certain National Talk Like a Pirate Day is coming up.
I think it might have already happened. But everyone be sure to send your gifts in to Auntie and indeed to Uncle Mike and the Seabass.
You're right. It's September 19th. We just missed it. How did we miss it?
And with Seabass moaning in frustration, we will close out.
I feel like you know what? I'm hard.
There you go.
Broken.
There you go. Get it out now. We will close out the old banter block and roll right into the trading block.
The trading block.
And welcome to the Trading Block. This is, of course, the portion of the show where we discuss what has been trading, what's been moving the markets and lighting up the old tape today. And it was an interesting day. We started off strong based on the news coming out of Europe that they seem to have some of their house at least a little more in order. And that, of course, is cause for a rally. And then also we saw GDP a little bit stronger than expected, though still not lighting up, not blowing out the charts there. But nonetheless, the combination of those two things seemed to combine for a strong up move in the early part of the session. We then, of course, started to turn around there towards the middle of the day. Looked like, I'm not sure, I was out of the office for the middle of the day. Did all the major indices go red at any point? Or I know NASDAQ's been red all day.
NASDAQ was down. At one point in time, NASDAQ was down over 2%.
Yeah, NASDAQ ever the laggard today. The tech's taking it on the chin. A lot of that coming out of... one of the big names getting crushed, of course, good old Amazon. Buy the rumor, sell the fact, and the fact is their Kindle Fire tablet, and the stock down 3.5% or so on that news today, down 7.5 handles to 222. So Amazon traders not liking the fact.
Amazon trader, that fire is that uncomfortable burn, not the good kind of burn. So, Mark, it was kind of interesting today. I actually had a client of mine mention that he was listening to our podcast, and he heard me talk about the fact that VIX had popped completely over VXN, and that spread had gone positive by over 2%. Well, since we talked about that, today kind of being the culmination, the VIX-VXN swap has actually completely reverted the other direction, where VXN is trading at about a 2.5% premium to VIX. So if you had done, that Mark and I had talked about, if you'd done our pairs trade and or our vol swap, you would be sitting on a boatload of Tosaw-esque amounts of cash.
That's some serious cash.
I know. You would be able to afford a house in St. Charles just like Mike Tosaw.
You, too, could live in scenic St. Charles, Illinois.
Up in the mountains.
Yeah, but not surprising, NASDAQ is taking it on the chin today, so that vol going through the roof, whereas S&P and the broad indices remaining somewhat aloof from the carnage for the most part. And
the banks call it.
Weird. You have the NASDAQ down and the Dow up as much as it is. You don't see that every day.
No, you don't. It was bank driven, the rally today, and I'll tell you, they seem to hate Apple and they seem to hate Amazon right now. They don't like Amazon because you sell the news. They don't like Apple because the Amazon product may actually be able to compete with them.
Yeah, that's why I find this crushing of Amazon so surprising. Obviously, the whole buy the rumor, sell the fact thing is playing out, but at the end of the day, if there's any company out there that can even hold a candle in terms of ecosystem to Apple, it is indeed Amazon. And
their cloud is incredible, and the fact that it's going to be a small, cheap device where you're basically running everything off of this cloud thing. There's a reason why it's going to be, and it's half the price of the iPad. I think that's what's going to differentiate this thing from everything else is, as opposed to $400, this thing's going to be $199. For those of you who say, oh, Apple, remember what happened to the 2E, right? Everybody still remembers how much Phone to Oregon Trail is. Nobody remembers a single Apple computer game from 1991 through 2006.
Ironically, Oregon Trail just re-released in the App Store. My little guy and I were playing it the other day on my iPad.
You can get Oregon Trail.
Love the Oregon Trail.
You can get that on I could play that on my iTouch or on the iPad.
Yeah, you can play it on any of those devices.
Boom.
I think it was free the other day too, so you might have missed your chance there to get Dysentery along with the rest of us.
App Store, get there.
But yeah, and a lot of people, I think they're getting hit.
Hurry!
There you go. They're also getting hit on the comparisons to the iPad, but I think they're really, at least in this first iteration, going after the Nook Color from the Barnes & Noble, which is kind of a stealth e-reader that most people don't know about, but it's been a huge hit for Barnes & Noble. Essentially, it was a cheap Android Color tablet, and it's been selling like crazy at $250 for Barnes & Noble. And so Amazon's looking at that business. I think they have a good chance to really... I mean, this thing is just a gateway drug to all of their online services.
And the interesting thing is people that just want to read books are out there buying Kindles instead of iPads. I mean, it's just the facts.
I mean, I definitely like the short-term premium sale going into the Amazon announcement of the tablet because that just was a no-brainer.
You're welcome.
But long-term, I definitely am on the bullish tip for Amazon here. I've been exploring a few longer-term trades to see what I want to do there. But definitely, with all the ecosystem they have going on, it's just a question of their margins at this point if they can make it pay the bills. But I mean, using
I'm
Prime,
downloading it for free.
You got in, so the sale is still going. So listeners, pro tip for you there: you can go to the App Store right now and get Oregon Trail for free, and you too can die of dysentery along with myself and Mark Sebastian. Uncle Mike too.
I have some thoughts on Apple too. I think that with everything, I was actually starting to tighten up on Apple in terms of the hedging, and that had to go and break 400 on me and then screw with my BBI for a while. But with that, it held 400 when we pulled back last week, but with this news, it's actually below the coveted 400 mark, and so I'm getting back into the let's tighten up the edges type of mode on Apple. I still think that over the long term, Apple is a good company, but this is one to where this is definitely a statement day for Apple, that's for sure. So kind of like gold, I think that I'm starting to get bullish on gold again, which I guess we can talk about in a little bit.
Yeah, I was actually thinking I really want to talk to you about that. What with all of your gold and silver positions. With gold having dropped to about $1.55, $1.57, how is it that you're managing everything?
Kept my word and stayed in the 170 put for a long time. But we got down to the mid 150s the other day, and actually it was very seldom do I actually roll at the bottom, but this is one of the times that I actually lucked out and did. I was actually thinking I was a little bit cautious in doing so. And I felt like I was really going out on a limb and doing so. But last week when we were at like the 155 level or around those levels, I actually did roll down from the November 170 to the November 150, and then rolled down the covered call from the November 185 down to the October 172 for even money. So we took some of the hedge off the table, and we took some of the deltas off the table, I should say. The hedge is still there, so if gold goes to zero, we're still well protected. But in terms of the actual delta of the position, we added deltas to it. So we still have the long-term integrity of the position, but with that pullback, we just dodged a huge bullet. And if gold continues to go down, we're hedged, but if it comes back, this is the benefit. This is like a collar trader's, these types of markets are a collar trader's dream when you get the choppiness and you can roll out on a downswing like this.
And Mike, we were actually just I was really thinking of you as I was on Bloomberg on Tuesday. We were talking about this just a minute ago. what I really like about Know Your Options, this kind of differentiates you guys from long only, is and I was making this comment to Mark. If I'm getting from point A from point B along, and there's a huge pile of dog crap in the middle, a long only fund will be like, you know what, go ahead and just walk through that dog crap. You'll get to where you need to go. What I like about kind of the Know Your Options strategy, and this is kind of the stuff I try and teach people too, is that if the way you guys set up is maybe it takes you a little longer, maybe it's a little slower to get from point A to point B, but you're never gonna get to your destination and go, boy, I've got a huge amount of dog doo-doo on my shoes. So I just wanted to kind of compliment you guys on that.
Oh, appreciate it. We're the pooper scooper of the financial service industry. I love it.
There you go. Put that on the website.
Thank you, Mark.
Put that on the business cards.
Is brilliant. Know Your Options. The pooper scooper of the financial industry.
I think
that's brilliant.
They'll be lighting up your phone bank with a tagline like that, sir.
Mm-hmm.
So obviously, metal's a bit of a rebound today, and Ford hovering around that 10, actually closed at 10 even today. So Apple to the downside. Let me guess, and going back to Apple for a second, let me guess, you're probably rocking a 150 put out there? I know you like to be pretty tight.
155.
155.
Actually.
Okay, that's pretty tight for you.
No, we're actually at the 375 for Apple right now, and so I'm officially going into roll down mode tomorrow, and that we're going to look to, by roll down I mean on the covered call side of it. So I didn't want to roll on weakness today like this, so this is one to where I'll take it overnight, and then we'll see where it goes tomorrow. But definitely the caution flags are up in Apple, that's for sure.
So you're collaring, is this all front month, zero cost type? Is it harder to get a zero cost, I would think, on Apple right about now?
Well, we got into the Octobers a while ago, so it's front month now, but it didn't originate as front month. So we kind of it was zero cost. And our original Apple position was when it was at around the 385 level, was the 375 400 October collar, and this was probably in the beginning of August, and that actually was at zero cost. So we've had to kind of do a couple things. Normally, I like to split the months a little bit, go a little bit further out for the puts, and then do more near term on the calls. But you're right, it just the cost wasn't there. So obviously we're not going to do those for zero cost, but just the premium risk didn't compute, if that makes sense. So
we
had to go double 2-month collars on it, and this one's been somewhat frustrating in that when it goes up to 420, and then I'm kind enough to roll my calls up, then it comes back. Well, this is the frustrating end of the collar trade, but thankfully it's come back, and we're going to be looking at weeklies. We're going to be looking at a few things tomorrow morning, and I think we'll be able to salvage most of the premium that we had to spend on the way up on this one.
I would expect nothing less from you than rocking the long-term put with the short-term call. Any other way is just bush league at this point. It's low rent. It's too ghetto.
Bush league collar.
There we go. But I'm not sure if you mentioned it before. I don't think we did. We didn't have a chance to get into it. But given in light of this news of Amazon kind of encroaching on Apple's territory, Jobs stepping down, obviously, you've been a pretty strong Apple bull. Some of your clients have been on this show. They're also Apple bulls. What's the outlook going forward? Still strong, bullish, or you starting to maybe take some money off the table for Apple?
Starting to be not quite ready to take money off the table yet, but like I said, the caution flag is up. We're not going to stick around too long if this ship starts to head south.
And while we're on the Apple tip, one more thing I think is interesting. We had an interesting comment from one of our readers the other day on the website, and I thought this would be a good one to discuss on the show, particularly with you, Mr. Sebastian, because you're Mr. Efficient Use of Capital.
I am Mr. Efficient Use of Capital.
We talk a lot about being delta neutral, about scalping long gamma. If you do indeed put on a long vol position, particularly in a name like Apple where you have a lot of premium, you need to defend that. But a couple people wrote in the other day saying they like to do long premium in Apple. They would like to scalp their gamma, but it's just so prohibitively expensive to put on any sort of underlying position. It makes it difficult to trade that properly. The amount of capital you have to allocate, the percentage of your portfolio to put on the long premium and then put on the underlying positions to scalp back and forth, it's onerous. So what do you guys do out there when you're trading long Apple?
Well, you don't necessarily have to scalp using the stock. You can use options to scalp. So
that's true. True.
One thing that traders can do is they can actually use options against another option position. In fact, when I was on the floor, that was actually what I preferred to do. The less stock I used, the better. And actually, that would be how I would be scalping stuff. So as Apple rallies, you can sell calls, and then when it falls back, you can buy calls back. What I would not suggest doing, I had a trader do this one time. As Apple rallied, he bought puts, and as Apple fell back, he would buy calls. And I was like, do you realize all you're doing is adding to your position?
That'd be a little bit backwards, I think.
No, but if you buy a bunch of premium, what you can do is actually sell premium against it. And that's actually a really great way of managing delta. If you really like your straddle, sell calls, buy them back. If you don't really like your straddle, sell calls, then sell puts. And the idea is that, and that can really be an effective way just to trade this stuff.
That was pretty much the advice we had, was just to use the options, because that's the only way you could really, at least this person in particular, could really fit it into the size of their account that they were trading. And we hate to think of Apple being the exclusive domain of, size up institutional traders and size retail. I mean, I think everyone should be able to play the game if they're so inclined. Just do it in a savvy way. And I was curious what your advice would be, but that's exactly what we told him as well. Use the options.
Yeah, I mean, what else could you tell him other than don't trade?
Trade Amazon instead.
Yeah, trade something that isn't $400.
Well, the other thing with that, this is where single stock futures, if they have lesser margin requirements, could really come in and play a major role.
I know. You can't even cross margin. It's ridiculous. No, I'm with you, Mike. And the one thing I comment about gamma scalping, I know it's a really sexy thing and everyone thinks how great it is, but when I was gamma scalping, I wasn't gamma scalping because I was like, oh, this is fun, let's gamma scalp. I was gamma scalping because people had just dumped premium on me, and it was the only way I could put on a position.
Yeah, so it was defensive in nature when you're on the floor.
If you're going to go ahead and get long an Apple straddle, for instance, do it when you're expecting volatility to rise. All right? Then you don't have to gamma scalp. You can just take off parts of your position. So if you're going to be buying a bunch of premium, do it in options that are really, really cheap. And I don't mean in price, I mean in vol terms. Otherwise, you're better off putting on some sort of kind of protected sale position or some type of spread. It usually doesn't make a lot of sense to just go out and buy a straddle without doing a lot of research into where volatility could be heading in the underlying.
Unless you're listening to those old late-night infomercials of make money in any market condition using options. Then, of course, you buy all the straddles you possibly could.
I don't think you should be watching that, considering that that company is a subsidiary.
We won't say which firm that was, or that they don't indeed endorse that approach anymore, thankfully. But that was the approach back in the day.
Buy straddles.
Pretty much. That was the...
Yeah, there's no such thing as volatility or premium risk, is there? No such thing.
No.
Market goes up or down, you can make money.
Yeah, well, as we've said many a time, people don't get volatility until they're wrong, until they're correct, and they still lose.
And Tosaw, I like your point about the single stock futures. That's a product that I've lamented for years. It really should have been bigger than it was, and really should have gotten.
We should get Spoo on here.
Yeah, we should have. Yeah, there we go.
That guy is the single stock futures.
He is. He's the one man band for that exchange. Of course, talking about One Chicago, the home of single stock futures, and I've done many things over the years, some columns, everything else I could, trying to support that product. But the brokerage firms, and I won't name which one, all of them really didn't want them to survive because they ate into that margin business, which is so lucrative for them. But on the retail side and the customer side,
why those variant swaps are doing nothing on CBOE.
Yeah, exactly. They don't want to lose that.
What I thought about them, my take on them was just the fact that you could buy a deep in the money call or put and get all the benefits of it without the unlimited risk. So why not just do that? That was always what I read an article one time. It said they were a great solution from whence there was no problem.
Oh, so I don't know that it's that simple. Being able to
but I mean, you had to have a 25% margin on them. And so if you had a lesser margin requirement, they would have been awesome. They would have been the greatest thing since sliced bread. But because of the high margin requirement, they never took off.
Well, the problem with a short call is if something goes really, really hard to borrow, you know what you're going to do? Get assigned.
Right.
And so the nice thing, what differentiates a single stock future from something like an in-the-money call is that you don't have that early assignment risk, which was I can remember when I was trading like ImClone or if I was trading VMware and somebody sold me some in-the-money calls, I'd literally unload my stock and immediately, that day, I would exercise my calls.
Yeah, these things have been around so long. When they were initially announced, they really had two main selling points. One was you could sell short on the downtick, which of course is moot now, and then also
that's right. That was one of their big ads.
That was exactly that was one of their big sales points. They started marketing it to market makers first, and the second part was, of course, the margin treatment, which wasn't as favorable if you were a market maker, but as a customer, being able to save on that 50% margin was a big plus for them. You're right; it was still higher than it probably should have been, but it was cheaper than a lot of retail could access margin for equity in the past. So those two combined things were pretty attractive, I think, to the bulk of the investing public. These things just never got any real push behind them, except for poor Mark Esposito there, his one man crusade to make. We should actually, that's a good point. We probably should bring him on to discuss.
I love Mark Esposito. He's a really nice guy.
Yeah, he did a lot with that.
I really like him. He's got great hair too.
We'll close out the old trading block then by lamenting the slow death of single stock futures, and hopefully maybe they'll make a resurgence, perhaps not. But listeners, if you're at all intrigued, I encourage you to go check out the One Chicago website and learn more about single stock futures. And that's going to do it for the old trading block today, and now we're going to roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is, of course, the portion of the show where we talk about what was lighting up the tape, the interesting and or the unusual options activity that we saw today. And it wasn't a heck of a lot really lighting up the unusual tape, but a couple of them stuck. A couple of them called out to me, so I thought I'd put them on the show. Number one here is Uncle Mike Tosaw's favorite. We haven't talked about it in a while, but I know this is just your favorite place on the planet. Of course, I'm talking about Dollar General. Uncle Mike, back on the odd block yet again. I'm sure you're pretty excited.
Love the Dollar General.
Well, good old DG closed today at $37.72, down about 6 cents. This is the name that's doing a whopping 1,500 contracts a day or so. They did nearly 9,000 today. And what we saw actually today was a continuation of, it seems like, a pattern we've been seeing in Dollar General for quite a while, which is relatively sizable call selling on the 40 strike level. We saw a bunch of this. We'll start off with what we saw today. We saw about almost 8,000 of the no 40 calls going up today, being sold for, the bulk of them actually were in one block. 7,200 went up at one time in a block for about 90 cents. There's not much open interest on this strike, so this is primarily opening positions. And we also saw, this seems to be actually a continuation of activity we saw starting back in October. We saw with the OC 40 strike, where this strike has just been lighting up the tape. There's currently about 40,000 contracts open interest on that. The bulk of that has been sales. A good chunk of it, 25,000, went up for about 30 cents back at the end of August 31st. And we had another sale of 11,000 for 65 cents a few weeks ago, September 16th. So size call sales going up for the past month or two in Dollar General. Looks like a lot of it could be covered calls. After all, the DG just hit a new 52-week high of about 38.5, so the 40 call level is right above that 52-week high, a pretty safe level to be writing some sizable covered calls on this one. If you're a bull on DG, you're taking some of your premium off the table by writing these calls against it, or taking some of your underlying exposure off the table here. But Uncle Mike, I know you guys were looking pretty bullish. I think it was Dr. Duke who was a big fan of DG. Have you guys been playing around with Dollar General at all in the last month? Is this you writing these size? Is this you writing these?
It's basically we used all the rumor mills so that way we could drive the price down. So now we're able to buy the calls. No, just kidding. No, it's not us.
This is one of those normal stocks, Mike, right? I mean, everybody's shopping at Dollar General and Family Dollar and stuff like that. I don't know. I'm not I've seen this stock really rush. Vector Vest likes it. I know that for a fact. So, it's just one of those stocks. I'm not sure that I would be as I don't know how you could possibly be that bullish on this thing, but hey, people seem
Yeah,
to
I'm not. I like the store. I don't like the stock necessarily. I do not have any positions in it, nor do any of my clients. But I just like the store.
Well, there are some fancy fashions in good old Dollar General.
It's very high end.
If
yeah,
listeners
St.
want
Charles,
to,
we got the Von Maur and the Dollar General. Those are the two places that we like to look at.
if listeners want to see the Dollar General fashion modeled for them, just check out our live show with Uncle Mike Tosaw from a few months ago, and you'll see the Dollar General fashions in full effect. It was quite stylish, Uncle Mike. I was very impressed.
Styling and profiling.
Well, yeah, so a lot of looks like upside call writing, a covered call writing here in Dollar General. Mr. Seabass, would you dispute that, or do you think that's, do you agree there?
Yeah, no, that seems to be a pretty popular one, doesn't it?
Yeah, makes sense. 52-week average. Put up some size covered calls. I'm sure there's a lot of funds out there that have been investing pretty heavily in DG lately. Need to take some premium back for their clients. So this is a decent way to do that at that level. And then we're going to move on to the odd block to another name. I think Mr. Sebastian will like this one. Good old Dreamworks Animation Skg, ticker symbol DWA. And your little guy's about 1.5. My guy's about 2.5 now. So we've just started discovering the whole DreamWorks genre of films where Kung Fu Panda and whatnot, and a fun collection of films. So you'll be into them pretty soon.
Oh, fun!
You get to
love me some of that.
Compared to some of the other kid stuff out there, the Kung Fu Panda stuff like that is Shakespeare compared to Barney and some of the other things that are floating around out there. But not too much sizable stuff going on in DreamWorks. But it was sizable for this name anyway. This name does a couple hundred contracts a day. They did well over 1,000 today. So that's size. What we saw was about 1,000 of the OC20 puts. So these are now in the money puts. Changing hand. Of course, DreamWorks closed today $18.97, down about 1% or 20 cents on the day. And we saw about, like we said, 1,000.
They're the Shrek people, right?
Yeah, they make Shrek too. They make Shrek, all that stuff. Madagascar, you name the non-Disney cartoon, and they made it pretty much. But yeah, these guys, they put up about 1,000 of these OC20 puts, open interest, just a couple hundred contracts. So it's all opening. Looks like some guy's trying to protect his downside here in DreamWorks. Not a stock that I've been following pretty actively, but it's been on a bit of a downside tear over most of the last year. Got up as high as in the high 30s, almost 38 back about a little over a year ago in early November of last year, and it's been pretty much straight down ever since, trading $18, nearly $19 right now. So this guy looking for protect some downside. Maybe he's been riding it down from 38 and decided 20 was his level, no more. He's gonna put on the puts there and end the free fall that has been DreamWorks. But I kind of like this name, and I just read ironically just yesterday that they're putting on starting a whole countrywide tour division or world tour division where they're gonna do ice shows and stage shows like Disney does to try to cash in on their characters a little more. So I think that would be a profitable business for them. Why let Disney have it all to themselves? And they're doing actually a cool thing. Looks like kind of like the Walking with Dinosaurs thing, only with dragons. Sounds pretty interesting. So little guy might like it.
With dragons. That's what
I'd like to see, one of the things that's been smart with some of these ones is, we saw somebody bought a just jack load of Mattel puts 2 days ago. And one of the things that some of these movie and toy companies haven't figured out is, using TV, using after-school cartoons, and using the movies all into one kind of trade. And I think that's really, really where the future is holding, where you've got Disney kind of has it, where they have the toys, the theme park, and the TV at once. The one key difference is that Disney doesn't really have a toy-based type of business. It's the TV, it's the entertainment side. The closest I can think, and I know I love Optimus Prime, but like Hasbro has that Hub Network. They've got all these movies coming out, and they've got all these toys that already existed that they're rolling out in movies. I'd like to see Mattel and DreamWorks work on, like, hey, how about Mattel smarten up and come up with a full-length Barbie, like a real full-length Barbie feature that they could get somebody like DreamWorks to actually do. Something like that would work.
There you go. Mr. Seabass calling for a full-length Barbie film. We'll call it.
Well, I'll just say.
We'll call it.
If they do it, I'll watch it.
We'll call this episode Seabass Loves Barbie. How about that? All right. All right. And with that, we're going to close out the old odd block today and roll right into the strategy block.
The strategy block.
All right, and welcome to the strategy block. This is, of course, the portion of the show where Uncle Mike comes down from the mountains to dispense some vintage options wisdom. Uncle Mike, live from St. Charles, Illinois, what wisdom do you have to dispense for us today, sir?
Well, a couple things. We were talking a little bit about gold earlier today and how it's pulled back a little bit. I want to review a concept. I know I've talked about it in the strategy block before, but I want to review a concept that I think should hold true to a lot of people that are past the contribution stage of their retirement and closer to the spot where they're actually going to start taking distributions. Maybe not there yet, but closer to it. First off, there's a concept called dollar cost averaging, and that means when you are looking to invest in the market for the long term, you put in $50 a month, $100 a month, $250 a month, whatever the case may be, and you put it into your 401k every month. And when the market goes up, obviously you benefit from the shares with which you hold, and when the market goes down, you continue to buy into whatever you're buying into, whether it's a fund, whether it's a 401k sub-account, whether it's a company stock, whatever it is, you're then able to buy more shares of it. And I think that concept is good when you're 22, fresh out of college, and you have a long time frame, and you really don't have a lot of money to lose. Where the concept becomes a little bit flawed is when you're 2 or 3 years from retirement, and you're not at a point to where you can put money into the market and afford to lose substantial amounts because you don't have enough time to recover it. Then one thing that we do a lot with a lot of our clients is we use puts as protection, whether it's through the collar, whether it's through a protective put. And oftentimes an objection to that is, well, I think the puts cost too much. Well, don't get me wrong, there's a lot of ways to hedge premium cost of puts. Where this comes in is that when you have a market like what gold has done over the course of the last couple of weeks. We peaked out, at least in GLD, at around in the lower 180s. Now we're back in the 150s. That's a pretty significant pullback. Now, what we've been able to do is we've taken profits on the put options as the underlying has gone down. So we've rolled down the put. So we've actually created an income source to the account, even though the value of the underlying has gone down. Now, don't get me wrong, it's still a losing position from when it was at its peak, but significantly less. Now, we didn't do it this time just because we're a little bit cash light in a lot of the accounts right now, so we've had to roll up puts so frequently with gold. But in other time, one thing that we do look to do in times like this is to buy more shares with that money that is in cash. So initially, let's just say that you buy a stock and you buy a put option to protect it. Now, once again, there's many more advanced ways of doing this, but the concept is the stock goes down, it goes against you. Well, what you can then do is take profits on the puts, buy another put at a lower strike price, and then use the profit that you get from the put option to buy more shares. What you're then doing is lowering your average cost price, so then when the stock does go up, or at least as you hope it goes up at some point, if it's not going to go up, you shouldn't be in the first place, then you'll have that much more money from the additional shares. And that's the way that's what we like to do at Know Your Options, as a way of dollar cost averaging, but letting the market pay for the additional shares. And that is one to grow on.
Thank you for that, Uncle Mike from scenic St. Charles, Illinois, dispensing the wisdom from on high, from Indeed on top.
Did somebody from St. Charles say something bad about your mom or something?
It's just fun to point that out. It's kind of like beautiful downtown Burbank. That's our version of that. It's just scenic St. Charles, Illinois.
Lovely Berwyn, Illinois.
There we go. Speaking of which, have you seen the billboards around town? Berwyn. Why not?
There's one around the corner, from me.
Why not?
Yeah, it literally is like, Berwyn. Meh.
Exactly. That's exactly what they're saying. They're like, you could do worse.
Berwyn.
Hey, we got Scarecrow Fest coming up in a couple weeks, guys, and the Thanksgiving Day Parade. best in any of the suburbs.
Well, there we go.
Merwin sure beats the heck out of Harvey.
Or even Gary, before we lose all of our listeners who aren't in the immediate Chicagoland area, we're going to close out the old strategy block and move right into Around the Block.
Around the block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what we're watching, what's lighting up our trading screens for the next few sessions. And maybe we'll kick things off with you. We'll mix it up a little bit this time. Instead of talking about what's coming up on the economic calendar right away and everything else like that, let's just dive right into it, Uncle Mike, and talk about what you're focusing on. Obviously, you're keeping an eye on those downside puts in gold and SLV. Also watching your Apple. Obviously, those are your main holdings. What else are you watching? Ford hovering at that 10 strike, so a lot of uncertainty there about what to do tomorrow on that.
Yeah, I mean, like with Ford, we do have some short premium in a lot of cases on Ford. Ford's become kind of a higher BBI type thing, in that we have so many different positions on because we've gotten so many people in at different times. But we definitely, in a lot of cases, do have some short premium on Ford right now, and I think it's pretty generous in the October month. So definitely looking at Ford. Apple earnings coming out on the 18th of October, and it's going to be interesting to see the price movement of it going into the earnings announcement, and see if they can continue to do the historically huge moves based upon earnings announcement, or whether this just becomes nothing. And by huge moves, I mean to the upside or the downside. So yeah, definitely a lot going on right now. The other thing that I think is interesting right now, a lot of energy stocks are at lower levels right now. Thankfully, with a lot of our energy plays, we've had short puts out of the money. We've been able to dodge a lot of the energy pullback that we have had. And don't get me wrong, the short puts are in losing positions, but they're still out of the money. So pretty happy with that, and just continuing to watch the tangled web with which we weave.
It is very tangled, and I do agree with Ford. We've been legging in and out of a lot of stuff here because you're right. The near term, whether they're weekly or front month premiums, have been so attractive, and the price levels in Ford are so attractive right here. I don't think, no matter which way the trade goes against you, I don't think in any sort of long term scenario, Ford at $10 is a losing trade. So I think a lot of people are looking at it that way. And in fact, I'm even just to show how pervasive these weeklies have become. I'm even starting to get calls from my dad, who has steadfastly avoided any talk of options for years, and starting to say, hey, what's the deal with these Ford weekly puts all of a sudden? So he's starting to become savvy to the notion of using a short put as a way to leg into an underlying position, or to indeed get paid for working a limit order. So yeah, these weeklies certainly have changed the landscape quite a bit, and with Ford hovering around this $10 level, I'm sure we're going to be seeing a lot of that in the days to come. You can leg into bullish risk reversals for credits. I mean, there's a lot you can do here in Ford that is just a premium trader's or an options trader's dream. We've also been trading a lot of Kodak. I know it's a bit of a dog stock, but it's got so much move, and so talking about relatively hefty volatility levels. Things been vacillating from 1/2 to 3/2 for most of the last couple of months. It's been fantastic for any sort of positional trading. We've been long premium, we've been short premium, we've been legging into risk reversals, and it's been a fun one to trade for quite a while. So we keep an eye on that one. I know, Sebastian, you love the really cheap ones. That one isn't 30 cents, but it's $1.69, so it's relatively cheap.
Not bad. No,
that's getting into the Sebastian ballpark at that point.
It really is.
There's the pink sheets, then there's the Sebastian ballpark, and that's a whole different game.
The Sebastian.
the micro cent stocks. Speaking of it, Mr. Sebastian, obviously we're watching that spread widen there between the VXN and the good old VIX. You putting on size on that spread? Have you been legging the old vol swap?
Yeah, well, that's there. But just from a more macro level, I think that VIX and kind of VIX structure is pointing towards a possibility of a lot of clarity in the next 20 days. Which I think could be really interesting. I don't mean a resolution, I mean clarity. So, kind of interesting.
That kind of goes a little bit in hand with what we heard this morning about some quote-unquote clarity coming out of Europe there with Germany voting to allocate some more funds to Greece and perhaps putting out that fire to a small degree at least. So perhaps the VIX futures traders are buying that on a little bit longer term approach and saying this is going to smooth us out. I forgot what I was reading the other day. I forgot what it was. It might have been The Street. It might have been Wall Street Journal. It might have been I think it was Bloomberg actually. Oh, your old buddies, Mr. Sebastian. And they were quoting someone, I forgot who it was, who essentially was saying that the entirety of the worst case scenario of Greece has already been priced into the market. So all we can do is go up from here.
Oh.
And I was just amazed that this person got any sort of front page top of line coverage in Bloomberg. It's amazing to hear these kind of quotes being floated around out there, that we've seen the worst, and the worst is priced in, and obviously it's a time to dive in with both hands right now. That to me is a little bit alarming.
Yeah, I don't know, but it's just I don't think that it has been priced in. But I did have one of my fun guys always has told me, he goes, the market's really good at pricing in macroeconomic events. It's the microeconomic events caused by macroeconomic events that always seem to screw it up. It's real interesting to see what's happening.
So it's not the hurricane, it's the little twisters that are spun off by the hurricane that do all the damage.
Right, it's not the hurricane, it's the nuclear meltdown that happens because of the hurricane.
Because of the tsunami.
Right.
Well, I think with that picture in mind, we're going to draw to a close this episode of the Option Block. I want to thank all of my partners in crime for joining me on the show today, starting with you, Uncle Mike Tosaw. What is coming up in the land of Know Your Options you'd like our listeners to know about?
What's going on at Know Your Options? Just as per usual, we have Webinar Night in America this Sunday night. Getting back to the basics, beginning options, fresh market, fresh attitude. Just basically, what is a call, what is a put? If you're listening to this show and you listen to Seabass talk about all this complicated stuff, and you're thinking, holy cow, this guy is just such a genius. He's too smart for me. Come on by to our beginning options class where we'll talk about good old Mr. Call and Mr. Put. And then once you learn that, then you go to Seabass and he'll tell you about the advanced stuff.
Oh, nice. Thanks, Mike. I appreciate that.
You're the genius.
Well, I don't know if I'm a genius, but...
you guys need to do some joint webinars. There we go.
That would be fun. Mike actually...
Him and I have been
talking about that for a while. So...
Yeah, we haven't quite been able to get it together.
We'll get there yet.
There you go. I think that's the perfect one set up for the Trading with Stupids webinar you've been talking about for a long time. Perfect.
Oh, hilarious.
Perfect. I would pay to see that. I'd pay good money to see that webinar. Of course. Speaking of Trading with Stupids, Mr. Sebastian, what is coming up here at Option Pit you'd like to let our listeners know about?
October 21st at the CME Group headquarters. I'm doing an all-day event on trading futures, options, and futures options separately and as a tandem. It's me and my friend Jeff Quinto. So if you have interest in learning about futures and futures options, go to optionpit.com/events. Don't forget, if you use OI 2012, it will take half off the price.
You can't beat that deal, folks. So run, don't walk to your nearest optionpit.com retailer for more information. I think a Slinky is included with each offer, correct?
Absolutely. If you sign up, I'll give you a Slinky.
And listeners, I want to remind you that we do indeed have the next series of live shows coming up on October 11th and 12th at the Futures Industry Expo here in Chicago at the Hilton on South Michigan Avenue. And a number of you have, well, first off, we're going to be doing Option Block, this show at 4 p.m. on Tuesday the 11th, followed immediately by Volatility Views at 5 p.m. And then, of course, we'll be doing the long and short of Futures Options on the 12th at 1:30 p.m., all from the stage there in the exhibit hall. And a lot of you have written in saying, but Mark, it's $50 to get into the exhibit hall. And I agree that is a little steep just to come in to watch our shows, as much as I might like that. Of course, it is a fun, if you're going to pay to go into any exhibit hall, FIA Expo is the one to do it. It's enormous. It's tchotchke filled, so you'll get your money's worth in terms of tchotchkes and not listening to us. But we are working on getting you guys some complimentary exhibit hall passes. So if you're interested in coming, checking us out, or just checking out the expo, by all means, keep an eye on the optionsinsider.com. We'll have more information for you guys as we get access to those passes. But those shows, again, October 11th and October 12th here at the Hilton on South Michigan Avenue. Come see us. It'll be a fun time. And that's going to do it for this episode. I want to thank all of you out there for downloading and streaming and subscribing to the program and making it such a success. And we will see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.